One of the often heard comments when there is a crash in the stock market is, what goes up has to come down. That holds good for commodities too, particularly gold. Namaste. Probably the first signs that not everything is dazzling with gold have begun to appear. Until now, almost every analyst or expert in precious metal has been bullish on gold. We even had somebody like JP Morgan predicting that gold will likely touch $4,000 per ounce in the second quarter of 2026. But things are changing. We now have two commodity research firms telling us that the bull run in gold witnessed since 2019 is over. They have their reasons for this outlook. In a note, Gold Bull Run, we call it quits. Mumbai-based Motilal Oswal Wealth Management, MOWM, says several drivers have fueled the current rally in gold and they are already reflected in the prices. It says some kind of market fatigue has begun to appear in gold at higher levels. COMEX gold has never gained more than 32% in a year, going by historical data over the past 25 years. For gold prices to advance further, the market now requires fresh significant catalysts, says the Mumbai-based firm. Research agency BMI, a unit of Fitch Solutions, says the rally is over for now. However, it has ruled out any quick collapse yet. BMI maintains its 2025 gold price forecast at an annual average of $3,100 per ounce, and it is neutral towards prices for the coming months. It says despite the spike in political risk in June due to the Israel-US war against Iran, gold prices remained tepid. This was an indication of the geopolitical risk premium being mostly factored in since October 2023, when the latest strand of the Israel-Palestine conflict began. BMI says gold is increasingly showing signs of desanitization to a weaker US dollar, lower bond yields, and geopolitical tensions. It sees rising downside risks that could bring gold price back to near $3,000 an ounce in the coming days. To tell us more, we have with us Mr. Manav Modi, Assistant Vice President, Motilal Oswal Financial Services Limited. Welcome to the Trending Commodity Picks show, Mr. Modi. Motilal Oswal is among the first to say that it is calling quits on gold's bull run that has been witnessed since 2019. What makes you to come up with a not so optimistic view of the precious metal?
First of all, thank you for having me here. Talking about gold's recent report and gold's recent rally. So, like you mentioned, since 2019, we've seen that rally coming in. Since Governor Powell started that rate cuts and the pandemic season happened, emergency rate cuts started coming in. So all that kind of pushed the prices higher and higher, and from 30,000 we've seen almost a lakh on the domestic front. From around $1,200 $1,400 in comics, we are almost at $3,500, which is a significant rally coming in. And every year we've seen at least 10 to 12% or 15% kind of a gain on an average basis to start with for gold. Definitely, now we feel in this year itself, since 2022, so as to speak, there has been something or the other that gold has been motivated with to start. First, it was Russia-Ukraine war, or the pandemic, or the Israel-Hamas war. This year also, the motivation was a lot of things together, especially President Trump's volatility, where he started with the tariff threats, the tax cut bill, increasing the overall debt, which already is an issue, and a lot of other things to couple it with. Now, definitely, we feel that in first 4 to 5 months, gold prices has risen significantly. We've seen more than 30-35% gains in 2025. Now prices have started to retrace. On a historical analysis also, we've kind of seen that since 2000 years, gold on COMEX has not gained above 30 to 32%. So I think a lot of that gains has already been witnessed this year. Gold will require more fresh triggers, I feel, for a further rise here. Definitely, we are not saying that the rally might be completely over from a 2 year, 3 year, or a 5 year perspective. But then, as of now, for this year, I think it will need more fresh triggers, maybe on, from the Fed part or the President Trump part to continue for more steam ahead. Apart from that, central bank buying has been more or less very subdued. Definitely, it's a net buyer, but very subdued on a pace. Risk or premium has been eased off from Israel Hamas or Russia Ukraine. Tariff related discussion is also on a standstill. Maybe soon, post this weekend, we'll see some bit of clarity on how the tariff talks has are beginning. But I think President Trump also wants some bit of peace on the Middle East, and how the tariff conversation also goes. So I think some bit of correction, some bit of ease off from here is warranted before maybe a rally starts.
What are the risks to your projections?
Definitely, sir. I think I like I mentioned the overall long term view. If I talk from a 2 year, 3 year perspective, gold could continue to rally. But if I were to say that as of now, if the correction doesn't happen like we are projecting or forecasting, the two or three things has to happen for gold to continuously rise. One definitely is Federal Reserve coming under the pressure of President Trump and announcing a rate cut. As of now, only two rate cuts are mentioned in the dot plot and are priced in the gold's overall price outlook. So one is in September and the next is possibly in November or December. If the rate cut possibility increases from two to say three, maybe in July month also a rate cut is announced, then the gold price rally could continue. Secondly, the geopolitical risks increases once again significantly, like we saw Iran and Israel war only for lasting for 12 days or so. If that escalation continues, maybe some more intervention comes in, or another, like Russia Ukraine is going for last 3 years, that is already discounted. But then other China, Taiwan, or maybe some other developments happen in the geopolitical tension, that could be a trigger. Thirdly, I think President Trump's tariff tension or the debt bubble concern increase maybe substantially. It is already there, it is already priced in. But if it increases substantially, that could ideally trigger the prices. I think. But apart from that, USD falling is offsetting dollar index fall. US yield falling is not really taken as a in a great spirit, which is not supporting the prices. ETF on the SPDR is witnessing an inflow after 2 years, but it's not boosting the sentiment as of now. So, like I said, these three are the main reasons which will or could provide that triggers for a fresh rally higher. Apart from these three happening, I don't see a substantial rally here. Maybe it could happen that it could trade in a or consolidate in a range, if not fall. But then these three triggers are important for further rally, at least for a couple of months here.
Thank you, Mr. Modi. Yeah.
Thank you, sir.
Probably investors and buyers can exercise caution over gold. Keep smiling and be happy. This is Subramani Mancombu signing off. Until we meet in our next episode. Good luck.